All right, Scotia Bank quarter two earnings 2024 is out, and spoiler alert is okay. Is okay, but there's a big glaring omission from this report, and I did not really appreciate that. Some of you guys already know what that is. I'm going to talk about that in a second. I just want to touch on their earnings per share 2023 versus 2024 same quarter. It is down, okay, so we're looking at $1.57 this year compared to $1.68 in the previous year. So that's down, not significantly, but also keep in mind we're in a, if you want to call it a mild recession, depends on your terminology, but it's not the best economic time, so it can be down a little bit. I can overlook that. It's okay, just like their quarter. It's okay. Now, the glaring omission, like I alluded to before, now that is the dividend. Scotiabank did not raise their dividend in Q2. That's when they usually raise their dividend. So this is very, very upsetting for dividend investors. Now, if you take a look and search dividend on their earnings report, it doesn't even come up other than the Canada Recovery Dividend and the fact that they've issued their next dividend payment. The Canada Recovery Dividend is something all the banks need to pay into, so whatever, that's not that big of a deal. But my major problem is they didn't even talk about the fact that they did not increase the dividend this year. It's kind of like they tried to slide it under the table. I don't really appreciate that, frankly. In fact, it took the earnings call for someone to bring it up. Some analysts had some questions about the dividend, and they asked management, hey guys, why didn't you increase it? You guys are looking like you have that extra room that you could increase it. And management came back and said that, look guys, we're not going to increase in 2024. We're going to increase it in line with earnings increasing next year in 2025. Okay, so don't expect anything in 2024 from the management here at the Bank of Nova Scotia. This is very upsetting, and for me, this is a sell. This is the new management. The new CEO took over, and I kind of had a little bit of hope for this company because they could take it in a different direction. Now, as some of you may remember, the new CEO doesn't have an extensive banking background. He actually only had a few years banking experience working in America. We do things a little bit differently over here in the Canadian banking sector. That's fine. I thought we'd give him a chance. He said a couple of good things that I liked, like he was going to stop focusing so hard on Latin America and kind of onshore everything, really, really focus on the primary market, which is Canada. Now, nothing's really shown up in the earnings report since he took over. Nothing's really changed, frankly. It's kind of the same old so far, but this is kind of a change for the negative, that they did not increase the dividend. This is going to kick BNS off a bunch of dividend increasing ETFs, going to take away their dividend increaser status, and it's just kind of a letdown for dividend investors. Now, they're not wrong in not increasing the dividend largely, but I mean, you could have given everybody a 1% increase and said, hey guys, listen, next year should be better and you'll get a more normal sized dividend increase next year. Things aren't great right now, but we'll give you a little bit of something. Because if we look at the dividend payout ratio, you can see that there's ample room. Let me show you. If we take a look at their current dividend of $1.06 per quarter, and we divide that by the earnings this quarter of $1.57, we get 67.5%. So that's their dividend ratio for the quarter, not for the year. So for the quarter, the dividend payout ratio is 67.5%, which is high for a financial. But overall, if you take this 67% payout ratio and you apply it to a different industry, such as industrials, this would be considered fairly low. So we need to compare it to its peers, and basically the good banks have their payout ratio closer to the lower 50% ratio. So 67 is high. But like I said, this isn't for a full year, and this isn't forever. This isn't the best economic times right now. So like I said, I would have really appreciated a 1% dividend increase and an explanation and some forward-looking statements that people could get excited about. We did not get that, and I don't appreciate it. I don't appreciate the direction management is taking. Overall, Bank of Nova Scotia is a sell for me personally. The stock hasn't done that poorly or well after earnings. It's kind of just status quo right now. Does have a pretty healthy dividend yield of over 6%, fine, whatever. But if you take a look at the 5-year chart, I mean, this thing is down 6.5% over a 5-year period. That's not including dividends, obviously. And if we take a look at the professional analysis here, we have 11 analysts saying hold, only 2 say buy, and 2 are saying the stock should underperform. So not a lot of excitement, for good reason. You know what? Your money would serve you better elsewhere. That's all I have to say about Bank of Nova Scotia. I'm disappointed in you. Let me know if you guys are buying it. If you guys are excited about it, that'd be interesting to hear about if you have a good explanation for why. Anyway, we'll catch you in the next video. Thanks.